are prepared to break the silence. I'll be out in the sunshine, running beside the lion. I've been feeling down, but I've been looking up.
Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm gonna show you something very powerful that will help you make much more profit. But before I continue, if this is your first time of visiting this channel, try your best to subscribe and turn on the notification so you get notified each time I upload a new content, and try to like and share this channel to your network so that YouTube push us to a high level of audience. So the topic is magnetic strategy to using moving average low in Forex synthetic market. So I don't have much document, I'm going straight to the chart and I'm gonna show you how this works very perfect. Okay, this is Forex market. I will be in the 1 hour time frame. I'll be in the 1 hour time frame, then after we upgrade to other time frame, pretty much higher time frame. Okay, right here, let's open 𝒓𝒊𝒔𝒈. Let's open 𝒓𝒊𝒔𝒈. So this is 1 hour time frame. Now what we shall be considering here is the moving average indicator. So make sure you come here and get moving average indicator. I think you see it on the trend. This is it, and then basically you need to set it as you are seeing it here. You need to set them. We have this, so 3 moving averages, so they are going to help us take advantage of reversals, not necessarily continuity but reversals, because what does a magnet do? Okay, we consider both continuity and reversals. A magnet either attracts or repel another magnetic object. It can either attract or repel. So the moving average repel or attract price. It attracts price in opposite direction to the trend, and it repels price in the direction of the trend. Okay, but for we to actually get this strategy correct, because most time we'll be like, let us follow trend, but the trend will just reverse. Okay, so this can help you as a scalper to trade against the trend while taking your profit using the moving average. Okay, so first of all, what you need is to identify a break of structure. First of all, what you need to identify is the trend of the market, whether the market is making higher highs and higher lows. Maybe in other time frame, you have to know what is trending. So the market is upward, right? So now when you know that the market is upward, so the reversals is going to be downwards. Now you wait for break of structure. As much as you can see, wait for break of structure. As much as you can see them, try to identify all the break of structure, and then like the major ones. So we have 2 break of structure. So we need at least 2 break of structure to believe in the magnetic strategy of reversal. Magnetic strategy of reversal. Then later I will talk about continuity. Okay, so we have this first break of structure, and then we have a second break of structure. Okay, and then when this second break of structure happens, the market continue to move higher and higher. This is uptrend, right? So the market continues to move higher and higher. Now the magnetic strategy is telling you that there is probability of price to pull back to at least one of the moving average, and is going to approach the lower period. So the period 50 will be reacted to first. Okay, so that's what's happened. Okay, with this strategy, if you are following good, and then when you notice we have a breakout here, and then we have another breakout here, then you should just believe that this market will one period of time, like after some time, is going to drop like this, and basically we have over 300 pips. Okay, so now for repulsion of the repulsion. The repulsion is if the market is trending in a given direction. Basically you use the black moving average to know the direction. So the market is upwards because the black is below the price action, or the price action is above the black, and so the market is upwards. So what you need is to understand the characteristics of the movement. So when you understand the characteristics of the movement, an example of what I mean by characteristic is on which of the moving average, on which of the moving average does the price saturate? On which of the moving average does the price saturate? You see that the price saturate between moving average 50 and 100, that is between this red and this blue. So in other words, if price tap into the red, like in between the red and blue, we expect to buy. So that is continuity. So because it's tap here, inside these two, so we are going to buy. That is continuity. So first of all, you identify the characteristics. Just one reaction to the loop or the move out to the moving average, we define the characteristics. So this is crazy. So we're gonna consider a situation of downtrend. When the market is downtrend, let's upgrade to H4 and see if we can get a downtrend. Basically, it seems that gold have been so much uptrend for a long time. Gold have been uptrend. I'm trying to get okay. We have a downtrend scenario. This is 4-hour time frame. Okay, so we have a break of structure here, and then we have another break of structure here. Okay, so if the market move far distance, you have to consider the distance matters a lot. The price have to move. It have to move as much as it can. Okay, so check before the breakout, the last breakout, measure the distance of the last breakout. So we have 26 pips. So you have to expect the price to reverse after 26 pips, around 26 pips. So we have about we have from here the breakout happen here, and then we have it reaches here. This is 26, exactly what I said, and then you have to take the trade back to the loop. Okay, so for repulsion in a downtrend, basically you study the characteristics of the loop, and this loop characteristics is that each time price react to red and blue, it ejects signal. So what you need to do, like it produces a self signal. So what you need to do as it's coming to this red and blue, we expect a sell. Definitely it must sell. That's the characteristic. You expect a sell, and you see that there is multiple reactions to the black. So this black can be a characteristic behavior of the loop, because each time price, there is a time price came to black and it get a sell. So even if you are taken out here, you still need to re-enter this market on reaching black. Basically you control your risk management. So right now we shall be looking what is happening in the synthetic market, and so we start with volatility 75 index. Okay, now we need to be on the 1 hour time frame. So this is 1 hour time frame. So how does this idea basically work on the synthetic market? Now, first of all, you define the trend by using the black. So the market is upwards. Right here we have a break of structure here. One, you see there are different type of price movement. So when price is moving, always understand the characteristics. There are different types of price move. So this market is moving impulsively. So most time we can't see some of the structures to mark, but mark the major ones. So I can see major one here. So you try to mark the major ones. I see another major one here. Okay, this one is better than this one. So I see this one. So what I need is to measure before the final breakout. What's the length? So we'll have from here to here, we have 9,000 pip plus. So if the market can actually move by 9,000 pip and beyond, it can move by 9,000 pips and beyond, so we expect attraction towards the moving average. So that's what happened. It started pulling back. Okay, let's try more scenario. Maybe during a downtrend. This market is downtrend because the black is above the price action, so we have a break of structure here. We have a break of structure here. Then we consider another break of structure here. We allow price to move certain distance. This is over 5,000 pips. And what's happened? Exactly. Immediately it moved by 5,000 pips. It began to react back to the loop. It began to react back to the loop. That's the power of this idea. You see that it pulled back to the loop. So in this type of stuff, you just look for strong resistance and supports to put your stop loss. Like basically you can enter a buy here, and because you see this point, that is rejection point, place a buy, put your SL here, risk 700 pips to get 5,000. Okay, that is crazy. Let's check some other assets like 𝒓𝒊𝒔𝒌 index. Let's use H4. Let's use H4 as time frame. Basically, the market is in a downtrend. The market is in a downtrend because the price are below the price action is below the moving average loops, and so right here we need break of structure. We need break of structure, two break of structure. So price break here, one. So price break here. Did the price break another place? Yes, price break here basically. Now the final break, the distance before the final break, this is around 700 pips. If price can move down by 700 pips, what will happen? You see, there is probability of getting attraction signal. Okay, most time it can go beyond the distance before the breakout, but you should expect the market to reverse. Then for continuity, you study the characteristics of the loop. You see that each time price gets into the red and blue, it produces a sell. It produces a sell signal. So what you need is let price get into the red and blue. You can get some sells. Even if you are taking out, then the black is there to provide another direction, another signal. So thank you. Make sure you become more proactive. If you want to make it in trading, you have to be proactive, and I don't know how to explain this. Watching videos is not alone to help you get your dream. You really need to understand the power behind the deep knowledge, the inner circle knowledge in trading, and the only way to take advantage of an expert knowledge, professional knowledge, is either you leverage their services or you actually learn what they are doing. So we have courses and we have VIP signals, and it's left for you to start making your own decision about how to set yourself free from a lot of losses. Thank you and bye for now.
If you're prepared to break the silence.